Appearing before the U.S. House Financial Services Committee, U.S. Federal Chairwoman Janet Yellen said that if the economy continues to evolve as they expect, the U.S. was likely on course to raise the federal funds rate target at some point this year. Present throughout this nearly 3-hour meeting was the FT's Sam Fleming. So Sam, first things first, what were some of Janet Yellen's key messages on rates?
The US economy had a really poor start to the year, marginally contracting in the first quarter, but the economy has picked up since then, especially in the second quarter, and that was one of the key messages from Janet Yellen. She said that the jobs market is on track, the US is continuing to head towards full employment, the unemployment rate at 5.3% isn't that far now from the Fed's view of the longer-term sustainable rate of unemployment in the US. Tentative signs of rising wages, and the consumer, critically, Janet Yellen picked out as starting to pick up a little bit as well. She pointed out that US consumers are more willing to spend money on big-ticket items like cars, and that therefore the US does seem on track to accelerate through the second half of the year. That does, as you hinted, suggest that the US will continue to be on track to raising interest rates a little bit later this year.
So why is the Fed ignoring calls for it to wait until 2016? Don't events in Greece and China argue for caution?
You're right, the Fed has been receiving calls not only from congressmen and women during the hearing today who argue the Fed needs to be very careful and be wary of squashing a nascent recovery, but also prominently from the International Monetary Fund, which a couple of times now has argued that the Fed should wait until 2016 before doing anything on interest rates, arguing really that the US economy is still not strong enough to sustain an increase from near zero borrowing costs. Janet Yellen gave an argument for why this was not her view, or why she disagreed with this view during the hearing, saying that if you wait too long before raising interest rates, that may mean that you need to push rates up more sharply as you react to a stronger economy, an economy which is more deep into its recovery process. Whereas her preference would be to move more gradually. This gradualism message is something that Yellen has repeatedly emphasized over the past few months. Gradual means starting slightly sooner and therefore having a fairly shallow trajectory of rate rises.
And then finally, Sam, what was the mood like in the hearing? It was fractious in places, it seems.
Yeah, that's right. It was a fractious hearing, really, from start to finish. The opening question from Jeb Penseling, the Republican chair of the Financial Services Committee, questioned the Fed on its transparency. He argued it needs to be subject to stricter monetary policy rules in its rate-setting approach, and also questioned the Fed's handling of a leak of sensitive information in 2012. So really multiple fronts, really, that the Fed chairwoman was under pressure, and that continued throughout the entire hearing with again questions about Fed transparency. There are moves in Congress to require the Fed to be audited, or its monetary policy to be audited, and also questions about whether the Fed is too powerful as a regulator, and also on the same front whether the Fed should be subject to some sort of monetary policy rule which dictates the conditions on which it sets monetary policy. So really several fronts under which Janet Yellen was under pressure.
Well, Sam, thank you so much. It feels a lot like we're coming to an end of a very, very long road trip. We'll keep tuned to see what happens.
Thanks very much.